This is a quick recording to show you the difference between a low risk versus a high risk fund manager or trade. I have two simple graphs from here. These graphs were extracted from Swiss market. One is my graph showing the performances of my fund, and the second graph is of the person following me. So when you come to Swiss market strategy platform and you click on the strategy of each person, you'll be able to see the graph. The main indicator I use is the amount of equity that is available to the trader. The difference between the equity and the balance. The balance is shown on a red line and the equity is shown with a blue line. So if the difference between the equity and the balance is too broad, or they are too wide apart, you know that the trader will not have any money left to trade until the gap is balanced or the gap is closed. It shows that that particular trader is risky more of its equity, to trade. The second graph here, you see in my own case, this is my graph, I will show it to you later. I try as much as possible to keep my equity and the balance very close, which means I don't utilize all my funds for trading. In the case of the second one, you can see there's a big gap, so which means as far back as June or so, this person, or even May, was not able to trade any longer. You can see this is a straight line, and his equity keeps falling down until this line is covered, which is a wide gap. So I learned this by studying statistics of my performances. You can keep the balance between your equity, or you can keep your trade. You keep this gap to be close, to be very small. Let's go to the main accounts. In Swiss market, if you come to Swiss market, you go to the public strategy. I'm using myself as an example, my trade, to show you what is a high risk and what is a low risk. I will go through some of this. Let's quickly go to my own chart. This statistics is the same thing I was showing to you. You can see from May on and on the difference. I keep this very close. Of course, there is a little bit drawdown. Again, drawdown, I don't actually close them so easily, but once there is a big drawdown, I implement other strategy. This other strategy, I have discussed them in my ebook. It includes buying back my losing trade. Once I buy it back, and I try as much as possible to keep them. Of course, the drawdowns are part of, trading. Today, market is up. The next day, it is down. But in as far as the money you employed to close the gap between your equity and the balance amount, you can always succeed. If you go to my statistics here, you will see that this balance, I have a trade which is on, it is minus $200 out of my total equity, manager's equity. This is the amount of money available for me. Out of 4,000, currently I have minus 200. So I can employ more of these funds to cover this deficit in my trading. This is referred to in my ebook as buying back my losing trade. So currently it is an open trade. It is showing minus 5%. This is small. I can close this trade at this point. I will not lose my 4,000. I will only lose this small $200. Maybe in another day I can continue to trade again and recover my losses. This is a small loss compared to the amount of money I am having. So you shouldn't be afraid to invest with me because I maintain this simple secret that my equity and my balance will always be close together. You can click on open trades to see those trades that are opened. We have two trades in my own case that are currently open. One is on minus 60, one is on minus 45. So once there is a favorable opportunity, I will find ways to cover these losses. I am not going to explain that here. That is a topic for another day. The purpose of this video is to show you the difference between somebody whose equity and the balance, where there is a big gap between equity and the balanced amount of money which is available. Let's go back to the second strategy to show you. I'm not trying to make it up. This is the second person, that is number 1. Drag XSX. You can see his equity. There is a big gap. So this big gap started, as far back as June. So which means he tries to cover the gap. Market was good up to a point and it started falling down again. And this on its own will not make him to trade. This is because his open trade is running at minus 51%. If he closes this trade, all his equity, will be wiped out. This is manager's equity, 3,231, and he is running a loss of minus 3,566. The only way he can survive is that he has to bring this difference, about 3,000, back into his account in order to be able to trade, and hopefully these losses will be covered. But as at now, he cannot execute any other trade. If you go to his open trades, he's carrying minus 3,000 on USD Japanese yen, while in my own case I was carrying only minus $200. So this is how to look at low versus high risk traders or fund managers. This is a second fund which I am managing for a different person. This is a very low risk trade. You will see I only have minus 1.2%. I can easily close this and hopefully in another day I will recover. This is a different, is the same strategy. I'm using low risk. I said the difference is that this capital is 1,000, the other capital is 4,000. And I didn't start the trades on the same date. You can use these statistics to look at which investor you want to follow when you are not so sure. You use the statistics presented. Let's look at this quickly. The statistics of this is very good, except it's very zigzag. It's not consistent. It's going up today, tomorrow it's going up, today it's going down. But this person also try as much as possible to keep the balance and his equity very, very close. If you go to the next one quickly, let's see, FX Financial. You look at the statistics quickly. he is having minus 42.48. This is a very high risk trader as well. You can see the difference. So until this is closed, until this gap is closed, he has to bring this amount of money, minus 3,000, which is almost 4,000. Otherwise, if he closes this trade, he will lose about 3,000. His equity will just be somewhere around 1,000. So this is how you can use the statistics available on Swiss market to analyze whether a trader is a low-risk trader. This is where we started. Whether a trader is a low-risk trader or high-risk trader. I have shown to you that my trades are very, very low risk. At worst, I can easily lose 10% and recover the 10%. I am not going to wipe out the equity that is entrusted to me by my followers. Maybe I will lose the profit of that particular month. But don't worry, I have other strategy, which if you read my ebook, I said I have strategy of buying back losing trade. I would like to explain this later in future to show you that even in this case where I currently have minus 5%, which is open trade, once I close this trade, I will have a recording of it. I can either close it in a loss or close it with a profit. In overall, it shouldn't affect my entire trading equity. Thank you again for listening to this short video. Have confidence and trust to invest in this Fractal Fund Manager. You will gain. You are not going to lose your equity overnight.